Hello guys, this is ObaFX Trading Academy and welcome once again to my YouTube channel. As we anticipate the opening of another market week, I would like us to quickly run through what we would be anticipating to probably happen in the GBPUSD market. So, as we all know, I dedicate most of the happenings on this channel to doing top-down analysis for financial assets. And like I said earlier, we're going to be looking at GBPUSD. I'm going to try as much as possible to make this video not too long. And for those of us that are used to my style of analysis, we do top-down analysis using pure price action trading strategy. And I do that using three major tools: the trend line, support or resistance zone, and the Fibonacci Retracement Tool. So without wasting much time, we have GBPUSD on the monthly time frame, because like I always try to do, I believe the easiest way to arrive at favorable decisions in analysis is by trying to tell a story that paints a picture of the market. So before us, we have GBPUSD on the monthly time frame, and from what we can see immediately is that, but to look at what the market has been doing for a while now, the market made a low, ranged for a while, made a lower high, and then came down to make a lower low, ranged for a while, made a lower high, lower low, and then the market is gradually trying to go upwards. Now, because this is the monthly time frame, each candle here takes a whole month to form. So that's quite a long time. So if I'm to impute a trend line here, we can say it is easy to look at the market and say, oh, GBPUSD is in a downtrend. But if I place a trend line here, you can see that this trend line has been broken and retested. Now, do I mean this is the first touch of the trend? This was the first touch of the trend line, the second touch of it, and on the third touch, it broke and retested. So this is signaling that GBPUSD wants to embark in an uptrend. And to add to that thought, I can add another trend line here. So this is showing us that GBPUSD has made one touch of an upward trend line, came back to retest it, and this. Now that alone is not enough. If I'm to zoom in to look at the chart properly, you can see that when price made this lower low, price came back, made a lower high. Now instead of coming back down to take out this low, to form a lower low, price stalled a bit and instead formed what? A high, and came back to form a double bottom with the initial lower high, and then now price has just formed another high. So because price has succeeded in forming a high, a higher low, now a higher high, we can now be confident to say that price wants to continue in the upward direction. So, but like I said, this is the monthly time frame, and what we normally try to do on the monthly or weekly time frame is to try to get the general bias of the market. In other words, the general direction which we believe the market would be heading. So from what we can see here, we can see that price is trying to go upwards. So the next thing, so let me take this out. The next thing I like to do on this particular time frame would be to draw my key levels. Key levels are mainly rejection points in the market. Maybe sometime within the week, I'm going to do like an exclusive video on how to draw key levels in the market. So they are mainly price rejection points, and these key levels are the places on the chart that we now refer to as what? Support and resistance zone. So if a particular key level stops price from going upward, we say it's a resistance, and if a particular key level stops a price from going downwards, you say it's a what? Support zone. So let me take this. That will be my first level. This would be my second, and I'll just take the three most recent levels. Now, because this is the monthly time frame, it will take a lot of time for price to play around these three levels. Now, you can see on the very first level, each candle, if I say here, representing a month, you can see 1, 2, 3, 4. 4 months price was rejected from this particular level. For a few months, it was also rejected from this level. The same applies to those middle key levels. We saw that price came here. Let me zoom this out a bit. We saw that price came here, was rejected. Price broke this level, closed fully above it, and price is currently retracing back to it. Now, this is my trend line. This is a support zone. This is a resistance zone now turned support. If I'm to add like a Fib2, remember we're still on the monthly time frame. I'm to add like a Fibonacci retracement tool, to be from this place drawn upwards to where price is currently rejecting from. So my perfect scenario would be price breaking this level and coming into this Fibonacci retracement golden zone. I'm sure by now, for those that are used to this, my style of analyzing the market, will understand what I mean by what the golden zone, which is the zone between the 50% and 61.8% zone. Now, my perfect scenario would be price breaking down through the support to come into the zone, make a third touch of the trend line, and then head upwards. But that's unlikely to happen quickly because, like I said, we're on the monthly time frame. So what would I do next to gather more information on what I feel price will be doing more recently? And that would be to go to the weekly time frame. Now, on the weekly time frame, you can see more clearer pattern of price going upwards, and that's making a series of higher highs and higher lows, and that's what price has been doing for a while now. Remember, this is like our major trend line from the monthly time frame. But from price movement on the weekly time frame, if we zoom in, we can see that it can take another trend line. Let me use this, another trend line perfectly. So there are two things that we can observe on this time frame. The fact that we have an opportunity to place an internal trend line, and now we can see clearly that price is also currently at a support zone. So we have price being supported by a trend line and a support zone. So what does this entail? This buttresses more on our initial bias that price is in an uptrend. Remember, for the rules of trading support and resistance, we buy from the support and we sell from the resistance. So because price is currently at a support zone and it is also supported by trend line, then our bias would be to look for buy positions. Why am I saying that? It will be because the market is usually based on a lot of probabilities. It will be more probable for price to be rejected to continue upwards from this very strong zone than for it to break the zone to come down into this space. So price is likely to do one of two things. Either it breaks through this zone to come down into this area that we marked out from the monthly time frame, or price will be rejected to continue in its upwards direction and maybe probably some other time move down to retest this zone. So if you ask me, I'll say that we'll go down to the daily time frame for more information. So we can see that the trend line is now clearer. So we see price made a series of higher highs and higher lows. So I can now take out this monthly Fib2 and take out this level because for now it doesn't seem like it's going to be relevant to our analysis, or they don't seem like they'll be relevant to our analysis. So we have price currently at a strong key zone. supported by both the trend line and a support zone that has been rejecting or supporting price for a very, very long time. If we take this back, we can, just by checking this place, we can see that this was September 2004. It acted as what? A resistance. So if we keep going, we'll see that this particular zone has been relevant for quite some time. So that would strengthen the confidence that we'll have here on this particular zone. So the question would now be, what do we do next? Knowing that both our weekly and daily time frame, as well as our monthly time frame, all point to the fact that price would likely go upward. So what I'll do next would be to go to the H4 time frame. Now on the H4 time frame, it's still sort of high, except for those that swing trade like myself. I can decide to look for buying opportunities from here. But however, because a lot of people start their analysis from the H4 time frame. So let's say you've opened your chart now, you see that you could actually draw a support here on the H4 time frame. And then you've been able to draw a trend line. So what would you be looking to do next? How do you take your trade from this time frame? First, I would impute a counter trend line. Counter trend line is the one going in the opposite direction to the initial trend line that you've drawn. We've been looking at the market in an upward trend, but in this H4 time frame, we can see that the immediate trend is downwards. In other words, price is making a series of lower low and lower high, and price, we say, is currently at a key zone. That means anything that occurs in this zone would signal price continuing in its general upwards direction. So in that case, I'll start looking out for bullish reversal patterns, like a bullish engulfing candle, a morning star, or a double bottom, or an inverse head and shoulder. But currently, we can't see any of those things here at this zone. So because we can't see any of those things here, we can't jump in to just take our trade. So more importantly, we can also take our trade if price is able to break this downward trend line. So in other words, if price moves upward to break this trend line, comes back to make a retest, then we can take what? Our trade. Now, all this could be done even in a much lower time frame like the H1. So we can see that even on the H1 time frame, price is still bounded by this trend line. So price is currently at a very, very strong key zone, and anything that happens represents very huge buying opportunity upwards. So I would like to advise that we pay close attention to GBPUSD this week, as anything that makes price to break out of the zone, out of this trend line, to make a retest, then we'll have a lot of buying opportunities upwards. So this will be my simple outlook for GBPUSD this week. And just to do a quick recap, we say that GBPUSD is in an uptrend and it is currently at a strong support zone, supported by both the horizontal support and trend line. And that all we need to do is to wait for a change of trend in this zone in the much lower time frame, like the 1 hour or 30 minutes time frame, and then we take our trade. We say that we can also do this if price also breaks this trend line that has been holding price from going upwards for a while, breaks the trend line, makes a retest, and then we can take our trade. So you can, if you come across this before the market opens, you can compare this with your own analysis and probably combine them to make better decision in the market. So if you're coming across this channel for the first time and you feel that you've gained anything from it, I'd like to plead that you quickly hit on the subscribe button for subsequent videos. You can also like the video and share with your friend. This is a trading academy. If you're just starting out your trading journey and you want to learn more about the market, or you need somebody to guide you on how to analyze the market like this, you can reach out to us via the WhatsApp number on my bio. We're also on Instagram, on TikTok, and WhatsApp. So thank you for stopping by, and I wish you a fruitful trading week. Cheers.